Who else would it be? This is Observations with Otsu. A lot of stuff has been going on. This is the first Observations with Otsu in the last 3 weeks. Took off for the holidays. I hope you had a good Christmas. I hope you had a good New Year's. I hope you just had a good time in general with your family, friends, loved ones. If you don't celebrate, then I hope you just had a good life in general for the past 3 weeks. Lots of things to discuss. We're going to cover the weekly time frames on Bitcoin, Ethereum, and Solana, and then potentially another couple assets. But looking forward, I probably won't because I'm kind of a little short on time today. In addition to that, this is actually episode 51, but I did not really celebrate the 50th episode for Observations with Otsu. So, yeah, that means I've been here for about a year now, roughly. So I think the next episode it'll be roughly 1 year that I started the observations. And I just want to say, like, I'm very thankful that you're watching. It means a lot to me. This is something that I don't necessarily have to do. I don't generate any money or monetization for the YouTube. It's purely for you. So I'm really thankful for your support. I really am. It does mean a lot to me. I'm just a regular, you know, redneck guy from the Midwest, from Missouri originally. So I'm just I'm just nobody. So I'm very thankful that I have people that really um, not just watch me, but also support me. And it also gives me a heavy heart in a sense because it's like I have a burden to make sure I make things as accurately as possible. And I don't ever recommend, I never tell anybody to trade anything that I say. I never do. I always come from the perspective as if this was me, this is how I am playing it. I will trade it, I won't trade it, whatever, right? So I never bring that approach. But that being said, I also know that there are people that watch to get what they need out of the markets as well. And so I never recommend making decisions based off what I say, but I also know that people watch me to make their own decisions, and it's very humbling. It really is. And so I just want to thank you for your support, um, especially with observations going for a year long. I do have a lot more plans too. I mentioned this in Knowhere, in which is the name of my Discord channel. There's a free group and a premium group, and so we are looking at expanding this. I usually do a Wednesday video called Knowhere Market Updates, which used to be called Casual Crypto and Coffee, and I'm kind of bouncing back and forth. Nothing will change as far as Knowhere is concerned, the actual Discord group, but I think I'm going to rename the YouTube video because I think it might be confusing for some. But it's basically meant to be there to get people introduced to Knowhere, and so we'll see how that goes. But regardless of that, I do have a new series coming up. I'm letting people vote on what that series will be because I've got two or three different ones, and I might introduce more. I've got a lot I want to cover. I do want to start covering projects and review projects. That's something that a lot of people don't do, something I'm very interested in. And then also, I've always been interested in personal finance approaches with, excuse me, with using crypto in mind. And a lot of people don't do that as well. There's a lot of there's a lot of things on YouTube that cover personal finance. A lot of very successful people like Graham Stephan, for example. He's one of the first people I used to watch 4 years ago. Um, and he was insightful at the time. I haven't watched any of his videos in the past year, I don't believe. But it's, you know, I like those personal finance videos. It helped me get out of my situation 6 or 7 years ago. The problem is that most personal finance people don't use crypto in their day to day, and they also some of them even go so far as to say that they're scams, to say that they're not valid, to say that you shouldn't focus on them. Everybody from Dave Ramsey, for example. A lot of people follow Dave Ramsey. I used to follow Dave Ramsey. I still treat a lot of his stuff as very foundationally good. I still recommend some of the things that he says. Actually, people are very surprised when I say that because the crypto world isn't really open to people like Dave Ramsey, and I understand why. But I take some elements of him, some elements of Robert Kiyosaki, some elements of even I think Kevin O'Leary, which is a guy that is almost a bad word in crypto. I don't follow him. I think he's a terrible person, but I do think some of his stuff is worth listening to. Graham Stephen, of course, and I can go on and on and on. But the point is that most of those guys, even people like Charlie Munger that passed away, I believe, all these people, almost none of them incorporate crypto into their day to day. And so a lot of those, you know, depend. Like I understand some of the reasons why, but I also think as crypto content tends, as crypto continues to emerge and be more mainstream, I think it has to be brought up at some point. So anyway, that's a series that I might present with that. So anyway, I don't want to get too far into that, but I'm glad that you're here again. I thank you for listening all this time. It does mean a lot to me. It's only episode 50, but it does mean a lot to me. Shows that I have an audience. I got a few preliminaries, mostly just Knowhere premium stuff and Apex script stuff, and then we'll get started on Bitcoin, Ethereum, and Solana. Two quick preliminary things. The first one is going to be Knowhere Premium. And so, first things first, you guys already know what this is by now. It's a premium version of what I already offer in Discord. So, Discord, I offer usually one update, 1 8-minute update, video update per day, Monday through, or actually Sunday through Thursday. Then I offer a request every Tuesdays, and then I sprinkle in some charts and discussion. And it's a way to kind of privatize your interaction with me because a lot of people want to interact with me on Twitter, and I don't really care for that. It's too, I get a lot of spam messages on Twitter, so this allows me to get everybody under one roof. You can come to me personally. You can DM me even. That's the only place that I accept DMs on the regular. So if I don't know you and you DM me on Twitter, I'm much less likely to answer. Whereas Twitter or if Discord, if you are already in my group and you talk to me, then I can recognize that you're in my group, and then we can have a discussion, right? And I have to do that because as I kind of grow in my follower count, I do get scam messages. I get lots of them. I got you know uh, Dex portfolios where I just get like bombarded with like meme coins that are probably attacks, and it's just I get all these things, right? So this helps. This is one layer that helps me serve you, and so this is one of these things. Like my YouTube is here to help you. My Discord is also here to help you, and you can do that. Now, if you want to support me even farther, so far as to do monetarily, I do offer a small I do offer a premium service for a small charge, monthly charge. And right now it's $20 a month, and that's covers extra videos. So you get one extra video per day. So for 5 days a week, you basically get 16 to 20 minutes of video if you include the free videos as well. So you get one free video regardless, and then you get one premium video. Those videos for the premium tend to be more detailed, tend to cover more specific coins, more specific trades. In addition to that, you also get more trading charts. You get a trading portfolio. We also started a Solana wallet portfolio. And then we also have private videos. So twice a month, I offer um, users' choice. Like the people in premium get to vote on what type of video they want me to present. So the first video, um, we covered, what did we cover? Oh, we covered Solana tokens. So it's a Solana ecosystem token. So we covered everything from the tokens that are on the Solana chain, the pros and cons of Solana versus Ethereum, going into the tech a little bit, going into the wallets, going into some of the exchanges that like Ray and Jupiter. We talked about Ray and Bonk before they went up the past 60 days, so that was really good. And that was a really good video. And the second video that we covered was released last week, and that covers the BRC ecosystem coins. So we cover like ordinals, things like that. How do they work? Are they controversial? If so, why? Do they make sense? How do wallets and exchanges with those as well? The third video hasn't been published yet, but it's going to be more of a trading video. I believe it's going to be more closely aligned to portfolio management, things like that. So some of them are going to be more tech oriented, some of them are going to be more trade oriented. And so it depends on who's in the group. So if you are in the group, you get to vote on the type of videos I get to do for you. And usually each video is about an hour long. So you get 2 hours of video on top of that. So yeah, so with the 20 minutes of video per day with with the extra, which is roughly, what is it, like an hour, almost, like an hour and 40 minutes a week, plus the 2 hours every month. So what is that? I mean, you're looking at about 6 hours of content a month, and that's not including the trading portfolios, the trades, everything else. And so right now and I say all this to say is right now it's $20. It's if you sign up now between now and I guess the next day and a half or 2 days, you keep that locked in price. Okay. I do plan to offer more features as we go along, and once we do, I will start increasing the price to make the support equal to the value that I offer. So just letting you guys know, if you want to sign up, you can sign up now, and you keep that locked in $20 price even at the end of this year or whatever. This is a fresh year. I can pretty much tell you this time next year the price will probably be at least double what it is now with the features that I'm offering. So right now it's $20 a month. It might this time next year might be 50. So this I'm not trying to scare anybody or anything like that. I'm just saying I do plan to offer more features by the way, so that incorporates all of that. So I'm gonna let that be up to you. Not necessarily trying to sell you on that, but I'm saying if you're interested in my stuff, if you've liked my stuff, that's a good way to support me and it helps you out. I've been told overwhelmingly like people enjoy the group. And so, anyway, I hope you consider that if you would like. The second thing is the Apex scripts. So that's something that I also offer. I offer a script service. One of the scripts I actually just put on the screen. So this is the Apex Classic. This is my most popular script. And this is by far the one that I've back tested the most. I've shared the most. So a few different things on here. First of all, this is what this looks like. This is what it looks like out of the box. If you sign up, you purchase it, you can do monthly plans. You can do buy you can buy it all together. I might do a lower monthly option. I haven't decided yet because these are also going to be put into bots too. So the people that have the lower price options might want to choose the bots instead because those might be more beneficial because they will tell you to buy and sell or whatever. So how this works is that you have a buy opportunity like this. So this was your buy signal, and so the thing is, you buy here at the close, and this red marker is your stop loss. So you put your stop loss up there, and you just put it over like so, and then and then the take profit is done by the user. So you can decide whether that would have been right here, or it would have been up here, or if you would have stayed in this whole time. If you did, you would have had 58% at 12R, for example. And so it's one of these things where I have no problem sharing what these buy and sell signals are, primarily because one, historically they've been very accurate. They've performed well. I've analyzed several other people's scripts. I've looked at averages. I've looked at the standards of performance over many different things, and this outpaces pretty much most of that. I'm not gonna say everything per se, mainly because I'm trying to be a little humble about this, but overall, it has performed well enough for me to have no problem sharing this live. And I've also done 5 hours of back testing on all of my scripts. I think for Apex Classic, that's for 3 hours of those 5. So I'm confident enough to share these signals with you. Now this is on the daily, and so we can kind of go on to Ethereum, and you can see these here. So that was a good buy-in. That was a little wonky, but it still worked really well. You had some congestion here, and so again, buy signal here. Solana, you had a really good buy-in here at like $21, and so see what I'm saying, like that's almost a 5x base. I think that is a 5x. So you see what I'm saying, and so the average, this is the most expensive one that I offer. It only is the price is only 1R worth. So I'm basically offering this for one trade, essentially. So I'll link a link in the description. I don't want to talk too much about it to plug it per se, but part of this, if you listened for this long, one of the reasons is I've chosen to go into 2024 without having sponsors. I've tried to work with partners to get sponsors for my YouTube, things like that, and I've decided that no real one product can sponsor me as adequately as I would prefer for a few different reasons. One, they want to put in their own rules. A lot of these, even exchanges, unless you're a super hot shot like one of the big time influencers, um, you're not going to get the deal that you think that you will. But two, I'm just not a fan of plugging their products too much. Something even in exchange. Like I have a partnership with BingX, for example, right? Currently right now, but it's not a monetary thing. But they still want me to plug in everything, and so I don't want to bombard you with an exchange that you may not like, and you may think that it's annoying. And so instead of sponsoring, I'm going to be offering my products and services instead. And so that'll be a way to support me directly. You will support me in a much better context that way. And so I don't have to do this. I don't have to sell these scripts. I don't have to do premium or anything like that. This is purely partly to, this is purely to support those um, that would need something like this or would appreciate something like this. And it also supports me. It does prevent drawdowns for me. And I'm open and honest about that. I don't think there's anything wrong with trying to offer something and getting a value in exchange for that. That shouldn't be a controversial thing, especially in the world that we are discussing this in, right? But at the same time, if you want to support me, this is the best way to do it. Okay, so yeah, so that way it can also be sponsor free, things like that. And so again, I really appreciate anything. I've had a lot of support over the past month and a half. Very thankful for you all. So anyway, that's the scripts. That's the Knowhere Premium. A lot of a few preliminaries. I took a little longer than I like, as I usually do. So let's get right started into the theme, and then we'll go into the Bitcoin, Ethereum, Solana. So first things first, I'm going to talk about the theme of this video, not just the celebration, but also a little bit of news stuff. And as you can see on the screen, I have something completely different on the screen now. That may not make sense. I didn't reference it up until this point, but it is something that I figured out this morning. Is that according to a law in 2021, if you live in America, there is a thing where crypto does need to be reported if it's over $10,000 within one transaction or a series of transactions. Now, I don't know how nuanced this is. If because I have clients that they pay me a certain amount per month, and that monthly charge is not $10,000, but the yearly would be, depending on the client. And so that's where, does this fall under something that I do? And if that's so, a lot of these, I have clients that are anonymous. So how does that work with them? Will that impact me? Well, the problem is it's a little more complicated than this for two reasons. One, there's there's not enough evidence to suggest that this is actually happening the way that it's happening. It doesn't necessarily subscribe to individuals, but trades and businesses. And so this would exclude many of you if this is the case. Now, I want to preface this to say this you need to verify this. I am not a tax advisor. I am not I do my own taxes, but I'm not particularly good enough to be a tax professional by any means. I'm certainly not licensed. So just keep all that in mind. I'm just sharing what I see and then giving my own personal takes. There's a guy, Jerry Brito. He's in charge of Coin Center. He's the one that is kind of um, headstronging this today because a lot of this is supposed to go into effect January 1st. I've read the tweet. I've actually replied on my own tweet, basically calling him out, saying that this is nuanced at best or lying at the worst. And so this is one of the messages that I've seen. So as he talked about, the crypto tax reportings took effect January 1st, and I just replied to this actually. If you receive 10,000 or more, and so he goes on, and so he links to his own article, of course. But I checked it. I checked all the links. Like this is what I did in college, right? I learned research writing. Like I know all of the critical things to research and write. And one reason I did not go into journalism, I was supposed to go into teaching or even journalism, but one reason I did not is because it's so freaking fake. Okay, people exaggerate these things, and I don't want to exaggerate people. Like, I don't want you to be living in fear. I want you to be living successfully, and with excellence, right? And with conviction that you are doing something intentional with your life. I don't want you to be in fear that the government's going to knock on your door, kick your door down because you didn't report your freaking dog with hat funds, okay? Like, that's not necessarily how it goes down. And if it does go down that way, we got a little more problems than that, right? So this is fear mongering to me. Now, this still could be true. I'm not saying it's not, but I'm saying look into this. And so this is basically what I replied. I'm not seeing anything verifiable that this is true. His blog references don't link to anything, and he's part of Coin Center, one of the top, you know, reporters. Probably not the top. It's not CoinDesk or nothing like that, but I probably one of the top second tier ones, and it's sad that they don't reference anything. And I haven't seen any articles in mainstream media. Not that I believe mainstream media either, but I see nothing. I see nothing from CSNBC. You think they would report something? Absolutely, right? And so maybe they will later. I don't know. But the thing is like there's nobody. I checked in several sources, several methods that I use as well to research. I see nothing. Okay, the closest thing that I see is something from 6 months ago, and it didn't really say one thing or the other. So take this with a grain of salt. There's also, in addition to this, if this is true, you don't have a way to report this necessarily. And so I think it's going to be one of these things where it gets nullified. I don't know. Again, I'm not a tax advisor. I'm not a professional with tax in any way, shape, or form. I do my own taxes individually. So take this with a grain of salt for one, and then two, try to verify this for yourself. But the reason I mention this is because for two reasons. One, that you do your own diligence to figure out what you need to do. Okay. Some of you guys aren't going to report this regardless, and hey, that's fine. That's on you. I'm not saying one way or the other. I'm not going to go there. Um, but I want people. The whole point of crypto is to do your own due diligence, to put money more financially to your personalized life, right? So that's the thing. I'm not here to cheat nobody. I've always paid my taxes. I've never tried to do anything shifty, and that but that also has nothing to do with this. This is just someone that's trying to report this and doing so with a little bit of fear mongering, and that's one reason why I don't like um, this. This is an executive director trying to fear monger you, and so even if this is correct, he's doing it in a way that's a little fear mongering, and I don't appreciate that honestly. Especially as things like ETF comes up. We'll talk about that here in a second. But overall, just take it with a grain of salt. But the other thing is I don't want you to be led by fear. Just try to, a lot. I've seen this for so long. This is one of the biggest things I see about trading. One of the biggest things I see about bad traders as well. They follow the news. Okay, I was just talking to my wife this morning, September of 2022. Everybody was freaking out about James Powell and everybody else. Okay, and what was I doing? I was looking for a bottom. Okay, and I'm not. I was right, but I'm not talking about me being right, nothing like that. I'm saying you need to think outside the news. The news does not have your best interest. There's a certain aspect to where the news will try to shake you. Okay, during COVID, which I understand is a very sensitive topic still, everybody was saying that basically the world's just gonna be dead, or whatever. And that was the number one time to buy Bitcoin. Okay, and I understand it's more complicated than that, but there is a history. I say all that to say there is a history when news tells you to do one thing, it's actually better to do the exact opposite. I got Jim Cramer on the thumbnail for a reason because he's like the perfect counter trader. So anyway, and I'll get to him in a second as well. But I mentioned this to say don't always believe everything you see, and that is why you cannot pay me enough money to be in journalism anymore. I don't care if it's crypto journalism. I've done journalism and I hate it. I can't stand it. I got out of there relatively quickly. I mean, I think I worked there for like 6 months, And it's a headache because you need to basically engage bait people. And first of all, I'm not good at that. Second of all, I don't like that myself. I don't want to do anything that other people won't like. So the products that I have also in the preliminaries, like those products and services are things that I use. And I use them like why would I try to sell you why would I try to have a product or service that I wouldn't use myself? That's silly. So anyway, I'll digress from this, but just keep an open mind with this. Do your research. I'm not saying that he's wrong necessarily. I want to make that very crystal clear. But the way that he presented this is a way to get engagement and to strike fear in your hearts instead of trying to promote goodwill. So that's that's the first thing is this tax reporting obligations. I'm going to talk also about the ETF because I think that that's also important. So I don't want to talk about this too much, at least relative to the speculation, because there is some speculation that ETF for Bitcoin and even Ethereum will get approved. There's also speculation that it won't get approved. There's also speculation about what it can do to the markets. Is it a sell the news event? Is it is it a big event where it's going to give you a big green candle, which I don't like. I don't like big green candles on news events because that usually means we round trip eventually. So, what does this mean? What's my personal take? So originally, and I'll go to this here in just a second. So, or I'll cover what's on the screen first, then I'll give my take. So this one was a couple hours ago. You know, Fidelity sets a Bitcoin ETF fee at 0.39%. So now that's a good chance that it's going to get approved. I think we can all kind of have the general consensus that it's going to be approved. I don't think that it's not. I think that's very unlikely that it'll get denied at this point. I think we all agree that it'll get approved. I think the result is if we approve, are we going to go up 200%? Probably not. Are we going to go up 50%? Probably not. Are we going to go up 5%? Maybe. Are we going to go down? And so there's a lot of speculation with that going on here. There's some other things, but there's a guy. There's this article right here a couple minutes ago saying that ETF is fully priced in. Now, and you can kind of just Google this and cover it for yourself. This one's like, oh, it could go up or down. Well, yeah, no, duh. Um, so you got all these things, and you even got somebody saying that it will not get approved this week. Who cares? The thing is, so my personal take has been in the past, and I say has been because I've changed this. My original thought process is that it would be a sell the news event, and I was pretty convinced that it would be, until a couple of weeks ago, because now the discussion is everybody thinks it's a sell the news event. So now it's one of those things where if everybody thinks it, then is it actually going to happen? And so that's a very psychological approach to things. That's one reason why I took my approach to Jerome Powell as I did, because everybody thought that everybody was waiting with their popcorn, tuning into him, seeing what the market will react to versus what he was saying. And so he's got a very powerful tongue in that regard because he can move basically global markets with one or two words. I had a feeling that as that becomes a bandwagon thing, typically the counter of that tends to be more accurate. Now going to the sell the news event, everybody's thinking that. So now I'm not so sure. And then Bloomberg, I believe the Block also posted something today saying that the news is priced in, or yeah, the news is priced in. And so, but the Block had a worse article because it almost kind of insinuated that we should sell now in anticipation of the drop. Well, all that's going to do is cause a drop now, which is going to cause a buy opportunity. So there's a lot of mixed things, right? At a certain point, you stop caring about what I say, you stop paying attention, or you fast forward to the video. The whole point is that we don't know. Okay, and so you have all this ETF shenanigans, and this is the new narrative. This is the new Jerome Powell. This is the new market rate hike. This is the new whatever, right? And so I don't think this is going to be an event, actually. Um, I really don't, because ETFs, the thing with a lot of ETFs is that no, most investors, most individuals, I should say, they don't wait for an ETF to be approved. Okay, it's one of those things where if let's say that I'm six, I know a guy at my church. He's 65, right? So, and my dad, he's in his upper 60s as well. So we'll take both of those people in mind. People that are like in the boomer age, into retirement age, are not saying, and they're not going to their brokers and they're saying, "Hey, this Bitcoin ETF, I want to be a part of it." First of all, it's going to be very unlikely. Second of all, some brokers won't even give them the chance to do that. The broker may say, "Hey, this is too volatile," or what have you. Now, that goes even further to say, you know, Bitcoin ETFs or crypto based ETFs in general could be part of an index. And so I'm not a fan of indexes because first of all, you tend to have more hedged um, results, which basically means you lose potential results. Now you also have less risk. But the second thing is that you don't know what's in an index. There's companies out there that I do not want to invest in, like Nestle. I do not like Nestle as a company. I don't want to invest in them. Monster. Monster is a very successful company. They've made a lot of money. I don't want to invest in energy drinks. It's just I drink energy drinks. I got one right here on my desk, but I don't want to invest in them because I do feel like energy drink companies are much more closer to tobacco companies than you might think. Now, that's just my opinion. I'm not going to push that on anybody. So if you're offended by that, that is just my personal take. I don't think I don't think investing in energy drinks is something that I want to do. I also don't invest in, gambling companies. I can't remember the fantasy sports. You probably know which one it is. But there's a couple of them out there. So I don't do that. I also don't invest in adult entertainment, things like that. And those are all my personal choices. Those are my personal convictions, my personal choices. And when you sign up for an index, you don't get to decide. Okay? You have your money put into businesses like Disney, for example, that you may find questionable, which I do find questionable, or Nestle, which has verifiable um, points of reference to hiring underage labor, or whatever it is. I don't. It doesn't even have to necessarily be a good reason. You might not want to invest in Apple because you just like Android. Okay, it doesn't matter to me. These are all my personal takes, but I don't invest in indexes for that reason. And but most importantly, what you need to know with this is that when somebody tries to buy into an index, they don't care what's in the index. They just care about the money. See what I'm saying? And so that's how all this bypasses. And this pertains to Bitcoin ETF because it could be, the Bitcoin ETF could be not firewall, it could be behind something else that maybe that individual investor can't get access to or only gets access to because the broker tells them so. And so I say all of that to say I don't think the Bitcoin ETF is going to have as much as an impact as you think it is. I do think it's going to pump. I think short term it's probably going to be a non-event. Because some people say it's going to pump sky high, some people say it's going to dump, sky low. It's probably going to be doing neither, honestly, with all the calculations put into that. And so I think short term it's just going to be a non-event. I think it'll breed volatility, of course, but I think the focus will be long term. The focus will be long term acceptance into retirement plans, things like that. That's what I'm looking at as far as it will be put into retirement plans. Now, there's also going to be another problem, I guarantee you, for the next bear cycle, is that the biggest thing about Bitcoin ETFs and any kind of crypto ETFs is that they'll probably be non collateralized. And so, if they are non collateralized, um, that's going to create a problem for mean reversion. And so basically it means we're probably going to go higher than I expect, but now we're also going to go down more than I expect because once they're non-collateralized, like when I buy Bitcoin, I buy Bitcoin. Okay? I don't buy a piece of paper that says I own Bitcoin. I buy Bitcoin. Okay? And so that's a little bit dated compared to when I joined in 2017. I have cold wallets. I buy with the intention to buy Bitcoin itself. Not I personally do not care about Bitcoin ETF because it's probably non-collateral. I don't know if it is or it isn't. It might be to a certain percentage, I think, I'm not an expert in that field. But if it's non-collateralized, that will be a problem down the road as people try to um, take out money or whatever, or what have you. Like, it could cause more fluctuations, more volatility, and also try to guarantee the bad thing is it's going to try to guarantee Bitcoin that isn't necessarily there. And so you might have more than 21 million Bitcoin presented, which we all know is wrong. We all know is not true. But that will lead more towards. I think that'll be one of the leading problems in the bear market coming up in the next 2 years. So we'll see how that goes. But anyway, short term, I think it's a non-event now. I'm kind of changing that from being a sell the news to a non-event. Long term, I think the next 12 to 18 months, I think it's going to be good. I think the next 2 to 4 years it's going to be bad, and I think after that it's going to be good again. So that's my ETF thing. All right, so now we are going to get actually into the charts, see what we got going on, and let's just keep rolling. All right, now we're on to the charts. And so, yeah, I apologize if that was a little too long, but this is the first, I'm kind of catching up as far as everything goes. And so let's go ahead and go to Bitcoin first. You already see some of my chicken scratch on here that I'll discuss later. I've discussed that in Knowhere Premium. And so I'm also going to change this chart just because I want to keep that, but I also want to get rid of it as well. And so we're going to work with the Binance chart for now. Also, I apologize if things are kind of out of order. TradingView has changed things once again. I'm still in the process of getting a monitor. In fact, I actually just reminded myself I got to text my buddy because I think he has got a free one I can use for the time being. And then I got a new computer coming and everything like that. So we'll work with this. So first things first, I want to talk pretty good bullish opening to the weekly so far. This is only a couple of days. Um, so we've had a little bit of a consolidation, as you can tell based off of the daily. That was a consolidation breakout. So we have that as an immediate narrative, so to speak. And so we have a few things here. First of all, one thing I see is you got the bearish divergence on this. So right off the bat, we're already cause of concern, so to speak. Now we also have the trend has reignited on Aroon, so it's always been bullish, but now we're at 100%, so that's pretty good. So when you get into these situations, it could go either way because you always want Aroon to be at 100%, and whatever the trend is, you want to favor. Now that being said, with a divergence, excuse me, that could be like a liquidity, an area of illiquidity or possibly even a blow off top for some people. And some people are concerned, especially with the ETF news coming up. This could correlate together. And so I've said these things in the past where I don't care for news at all. And I don't look at news, but news does tend to follow the markets pretty significantly. Whereas, for example, is if you do have a sell the news event, typically there is a sell the news where there is a divergence. And that's because it's not because the news caused that event, it's because the event helped bring the news more to fruition as far as the price goes. So a lot of people think narrative drives price. A lot of people think price drives narrative. And it's very nuanced. It's a very interesting thought analysis. And it's too much for this video. But one thing I want to say is we do have a divergence in mind. I'm talking to you on January 2nd, pre-ETF approval. So it's giving you this as I'm giving you this as a consideration. Now, we have two things I want to look at as far as price action. First of all, you have this top right here, so I want to identify that, and this bottom right here. If we extend that over, this is what we got going on. And this is the main thing I have on the Coinbase chart, which I'll flip to after the weekly is done analyzed. But we had a touch here at the mid, and now we're kind of expanding up, and so that's a good sign. My target has always been 47 to 48,000. Roughly, I've varied in that, but roughly around $1,000 swing, and so we tend. It looks like we are approaching that, and so if we go to ETF approval, it could mean that we could flash pump to 48,000, and then we could come back down. That's certainly a possibility. We could go down now. I mean, I think there is good reason to believe that we could at least hold this off for a while as far as um, big price action. We could see anything. That's the thing with the ETF news. We could see a big pump, we could see a big dump, we could see nothing, we could see any of that. And that's why I don't pay attention to it, because all it is there is to live in your head rent free and even cause you damage, cause you to worry, cause you to close positions that you wouldn't have closed or add positions that you wouldn't have added. See what I'm saying? Like it's an extra factor that it makes things more complicated than simple. And trading should be simple. You should be trading as simply as possible. And that's what a lot of people don't understand. And that's why a lot of people just hire brokers and just do indexes, like I mentioned. It's an easy thing to do. And so they trust somebody else to do it, whether they're good at their job or not. And they just let somebody do it. And at the end of the day, those boomers only care about the bottom line, what the number is on their portfolio, right? And so there is some things to appreciate about that. You should try to break things down as simple as possible. At home we've always tried to do home cooking, try to do homemade. We don't have a microwave. We haven't had a microwave for 8 years, in fact. And so we've lived completely fine. We have a water kettle, but anyway, I say all that to say is we started making homemade pizzas lately, and so it's very easy. Like dough is very easy to make. Flour, salt, water. Basically, and some yeast if you desire. And so a lot of the elements, and guess what? It tastes better. And so we do homemade grilled cheese sandwiches. We do everything. And so it you understand like homemade tends to be simpler, simple ingredients, right? Um, I don't think anybody likes to go to the store and say like, "Oh, look at this! Look at these snacks. They got 50 ingredients. I'm so glad they have all these ingredients that I can't pronounce and I can't spell and I have no idea what it does to my body. I don't even know if that's a verifiable ingredient. What does that even mean, right?" And so versus a homemade pizza where it's just like cheese, meat, flour, salt. See what I'm saying? So simpler tends to be better, right? And so that's the same with trading. You should not be making this more complicated. You should be making this very simple. And so this is kind of what I see. So for the ETF news, that's one reason why I'm not necessarily sold on that overall. Um, so this is what I got. Now, another thing that I have that I'm looking at is a trend line going up to this route. Now this is a little bit high here, and so I do want to say like we could go up to this point, like we could break upwards to 52. And so it's one of these things where this is why I'm not sold. But one, I wasn't sold at all-time high before 2023. Some people were saying that. But this is one reason why I don't think that we're going to go to all-time high right away, because if you follow this trend line, if we go to all-time high close, we need to wait until June. See what I'm saying? So like if you do like the price action for here, that's where that price action is going to go. If we do that next week, that would be the second week of January, and the highest that we would go to is 53,000. And so, why is this trend line important? Because things can't things can't go parabolic unless this trend line breaks. And so, you only get a few chances on parabolic runs. And so you can see it like here. So here was the COVID, you know, this was not a parabolic run, like it kind of was, but kind of wasn't, and it faded. And so after COVID, we did have a parabolic run, and then we had another short-term parabolic run. So we only had at the most two. Even if you wanted to add this one in, you had three over the course of 3 years. So you only get about one per year, roughly. And so that's the thing. If this would break above, that's when the real fireworks start. And first of all, I think that's too steep, too soon. Second of all, once we do that, there's no turning back unless we drop significantly, like 30 to 50%. And so that's the thing. It doesn't make sense to go into a parabola just yet. A lot of people were thinking that we would have all-time high before 2024, and some people still yet think that we are going to have a all-time high before the halving. And I'm not against that. I'm not necessarily, but I think we'll just put April 15th as the halving. And so if this happens, let's go ahead and move it over from current price action to now. So now, in order for this to, this would go up to 60,000, which is good, but that's not all-time high. So if it goes to all-time high, let's say a close, so at least 66,000, it would have to go into a parabolic run, or it could close there. It certainly could. But the math isn't there for me. The statistics, the probabilities, it's not enough for me to be convinced. And so none of that really matters to me either, because all that is nuanced. I'm looking at what the markets are saying. And so the markets aren't really telling me that we're going to go above 66,000 by halving. I think it will be after that probably. More than likely, we're probably going to get a pump somewhere in this range, somewhere in the 50,000 to 60,000. I know that's very vague, but it's worth mentioning. And the market's pretty red today overall, but I don't think that's necessarily a bad thing because we've had green mark. I mean, the market's been pretty rough the past month or two or week or two anyway, and so this is the first real market that we're getting real price action with. Where the holidays are not here no longer, so I think having a red day makes sense. Usually that's the first day of the week anyway. So anyway, that's what I got going on with this. As far as this goes, I still think we're going to go to 48,000 on the weekly. I am cautious with the divergence, but overall this is looking pretty good. All right, so let's go to the daily. We're going to switch to the Coinbase chart for this one. And so because I've already basically got very similar chicken scratch on here, but I got the continuation pattern. So that's what I want to look at for this one. We had a continuation pattern. I mentioned this on Twitter, and it already had the confirmation breakout. So I'll mention this first, and then we'll get into some counter ideas, I guess I could say. So we had a clear continuation pattern. You had the trend line going down, trend line going up in a triangle. Generally, most of the time, like 80% of the time, roughly, that ends up resulting in a bullish thing. It actually broke above, so this would be your area of your long signal, and so your stop loss could be anywhere you want, because this is just an example. And then whatever you want to target. So this would be the frame of reference that I'm looking at. Now we just recently got a pretty significant wick. A lot of people look at that as like a bad thing. I'm not necessarily saying it is or it isn't. Probability speaking, it doesn't matter to me. I trade differently. So whenever I execute a trade, so let's say this was an executable trade for me, and this was my stop loss, and this was my target 50,000. I trade this until it becomes invalidated. I don't care if it wicks. I am not scared of wicks, okay? I'm not scared of price action going down. A lot of people are, and those people are very reactionary. I'm not saying that that's even bad, okay? I'm just saying that that's not how I trade, and that's not how I view trading in general. I think it's a little too it's you can get too preoccupied by looking at wicks, looking at day to day. And so what you want to do is for what I do is I enter a trade, I mark an alert, usually halfway down here at the halfway mark, put another alert with this plus sign at the bottom. I put another alert at break even, and then I put another alert here roughly wherever my laddering targets are, and then I make another alert for my take profit. And so that's what I do. I mark it, I set alerts, I close my laptop. That's it. And if I look at my phone or my tablet or my computer and I do not get an alert that shows any of those, I don't have to be concerned. That means price is still within this range, and I don't care. I don't care because price hasn't hit a target for me to change my thought process. This could go up and down for 30 days, and it doesn't bother me. Okay? I'm not concerned about a flash crash or a flash pump. Generally speaking, that does not happen very often. And in this environment, pumps tend to happen more than dumps anyway. So there's no real reason to be focused on this. Now, that is how I trade. Some people don't trade that way. I've found that when I do try to trade more sporadic and emotional like that, I tend to trade worse. So I don't do it. I also have a family, so I need to be off the screen. This is a way to manage that, right? And so I've learned over time that the more I emotionally get involved, the worse my trades perform. The less I involve myself, the better my trades perform. And so that's why I make alerts. That's why I made those scripts that I'm selling on WOMP, because it helps automate. It automates like 75% of my entire process. See what I'm saying? So that's what we got going on. So far, this looks okay. I'm not too concerned about this because we get wicks like this all the time. Like, here's a significant wick. Yeah, this is roughly 50%, but that's still a pretty big wick. Like, look at all these big wicks, and then we still ended up going up. See what I'm saying? So, a wick is not an indication of going down. Okay, and so Bitcoin is up roughly 2% while most things are going down. Maker is up good because they're going to rebrand, and they're going to do allocation, things like that. Um, but some of the market is still doing okay. Ordi is still doing good as well. A lot of your inscriptions are doing good today, and so and Bitcoin is doing good as well. So anyway, that being said, that's I do think Bitcoin is starting to get more dominance in the market. So in addition to that, so I'll digress from that. In addition, you did have the 50 RSI bounce a few days ago, so that was a good sign. I think I mentioned closer on the 4 hour that we had this dip here. I won't really spend time on the 4 hour, but we had kind of a dip right here, and so that was a good sign to get in at this middle point. And I didn't advertise that, so I can understand why anybody would have missed that, including me. I missed it myself, so too busy with holidays. In addition to that, we had a bearish cross a few days ago, about 3 days ago. Then we get a bullish one, so that's very interesting. We have a double cross, and the high the bullish cross is a little bit higher on the charts, which is also a good sign as well. So don't be discouraged necessarily. And so what I want to say with this is I'm very bullish on this as long as we stay above this trend line break. So if we close below this previous candle, like we have to close below it. So I'd say, and even below this bracket, like 43,500. If we don't close below there, I'm very bullish on this. I'm okay going underwater on this for a little while, even because this looks good. You don't get many chances on the daily to kind of redo this. The Aroon has flipped bullish. It doesn't flip bullish too many times when we go on a run. It might do it like 5 to 7 times per cycle. And so, no, I'm not scared by a wick. So anyway, that's what I see. Like I'm pretty much bullish on this. I don't see any reason why we shouldn't be. Everything looks good. Narratives are aligning, although I couldn't care less about narratives. But this is looking pretty healthy. I would say once we get to 47,300, I think we should be mindful of the reaction. If we have a sharp reaction, then I think we could take profits and work from there. So overall, looking pretty solid. So that's Bitcoin. Let's go ahead and go to Ethereum. All right, let's go ahead and go to Ethereum. I'm going to mention the weekly, and I'll do the same thing again. I got a lot of chicken scratch on here that's very important, so I'm going to do. I'm going to go to Binance again. Binance is good for charts. I don't use it to trade, but anyway. So on the weekly, we close pretty much a weird Darth Maul candle. But we still close above. We're still closed above for the past 4 weeks, looking pretty good. We're broken out of that ascending triangle that we've had for pretty much a year now. We do have currently we have a divergence in play, but also be mindful of the weekly divergence on the Bitcoin as well. Neither one of those are confirmed yet because the weekly is still open. So keep that in mind. And so we have that here as well. In addition to that, we also have a liquidity marker right here. And so we're kind of stuck with this in this range, and that's kind of something that I focus on in my Discord channel. And overall, if we held 2286, that was the number that I prescribed last week, we would be doing okay, and we still are. We're still doing okay. Still above here on the weekly. Still looking pretty solid. Massive bearish consolidation, so there is some cause of concern, but overall, not much. We also have this as well, and so this is your middle marker, and we are currently above that in the mid. So this is looking good. I'm still cautiously optimistic if we close with this divergence, and we probably should. I think that'll make sense, unless we just close below or something. But yeah, that's pretty much it for Ethereum on the weekly. There's really not much. Sorry, I'm making some noise here. Really not much to say other than that, because the most important aspect is on the daily. And so with this daily is it makes more sense to focus on no, it's on the daily. I'm sorry. We have a bullish channel here, and this is what I like. We have this consolidation. We have 3 drives going, not necessarily 3 drives as a pattern, but 3 attempts, I should say, going to the upside. We can get rid of that as well. And so this is looking pretty solid. So this was your liquidity marker. With this, it broke above but didn't deviate. and so now we're having a third try, a second attempt on the retest, and so we need to recover this, or we need to go above this, I should say. Mixing my words here right now. So going above 2400 would be ideal, and so if we can close above that, then I think we are well on our way to 2900, and so something like this would be how I would plan that out. So very, very easy 20% with a 5.8 R value on that. Shorts, a little bit of tighter of a stop than normal, but we shouldn't flip below this, and especially, we definitely shouldn't flip below this. So you could also do that very reasonable 3 with the same percentile. Still looks pretty solid. Either way, it looks good. Aroon has not crossed bearish. It's trying to, but it's failing so far. That's a good sign if you're a bull. And so other than that, there's not really much to say on Ethereum. Looking pretty solid. A little bit more textbook. It's going slower than I would like, but still reasonably okay. So now we're going to go, that's very quick for Ethereum. We're going to go to Solana. We have a lot to discuss about Solana. All right, so now we are on Solana on the weekly. So there's a few different things. One, so we closed bearish last week. We actually closed above the mid a couple weeks ago, and now we have deviated below. This is a sign of a deviation, and this is something that I don't like. If you guys know me, you know I don't like deviations more than almost anything else in the markets, because it is a sign that we could be going down. And so this could play into the whole sell the news event. It is interesting because as much as I am bullish on things, I can still see a drop down market wide. And that's where you get into trouble, however, is because you're like, well, I can see both sides. And then so you kind of check into your emotions. Like, what does my emotions have to say? It's like, well, of course you're freaking scared. So that's the thing. You need to kind of remove that when it makes sense. But also, don't be stupid and lose money for no reason. So anyway, we deviated. I don't like this particular deviation. I would prefer to wait to add on anything in Solana or even the Solana ecosystem in some cases until we close above this 109. Now, that being said, we did close above on the daily during the holiday, so that can play into it. I could make an exception that we could close if we continue to stay above it, as long as we don't close back below, then we're still looking okay. The problem is we are closing below currently with about 4 hours left to go. Going back to the weekly, we did. We're starting to see the bearish Aroon cross a little bit. This is bullish overall still, but it is trying to make an attempt to cross, and so we need to be mindful of that. We also are overextended on the RSI, and so if this deviates below, we do have this isn't a bullish breaker, but we could see something as low as $79. It's very possible that we could do that, especially if Bitcoin tries to keep strength here. So overall, it's very tricky. I don't like this positioning, honestly. Very, very tough scenario. Actually, I'm going to go to Binance again because I think it has a longer chart. Yeah, it does. And so, not that that makes any bit of a difference for what we're talking about now, but as you can see, there's a big gap, and we don't have to break down. But that's also a sign that liquidity could be a little more sensitive relative to every other area. And so this is the area that we got to work with. I mean, there is some here that we can look at. I can kind of take a look at some volume profiles to see where we could land. I kind of added some right here. If we kind of work with this, I think it should refresh, maybe not. So I added a volume profile on here. I don't normally do this, but as you can see, it's basically in the middle of this lower channel. That shows you that a lot of people did buy in this region. And so that makes a little bit of a complicated scenario because there is room to drop down. Now, I do kind of want to take a look and see where this could land within a range of this area. And so this is what that looks like. Sorry, I paused to kind of look at this. But overall, it's going to be roughly around this range. And so that could be where we retest. There's a good chance, again, I don't normally do this, but in this particular instance, it does warrant this extra feedback. And so we could revisit down to the 91, even $89, $87 range, I should say. So I'll just get rid of this as well. And just put that in mind. So this would be the reference for this range right here. So most people in this range from $75 to $140 bought around the $90 range. And so probably because on the way down, you had that $100 psychological resistance and people bought, and so that could be a reason. Now that's flipped, the people that are still in from $100 might keep that in protection, although we did have a drop down after FTX, so just keep that in mind. So this could be an area of contention, about $90. And um, that's if we go down. So going on to the daily, this looks a little more, this is Binance, and so that's one reason. Like, there's a little bit of a difference here, and that's why I also kind of lead to the sign of caution. Like, I don't like relying on like a couple cents move, right? And so I want to keep this in perspective. And that's also why I have different alternatives to long, like a Darvis play. Like, so Darvis box would be longing once we get above this wick at 126 or 130, I should say, to give us some room. That would work well. I don't particularly like how this is kind of curving and rejecting. Um, I mean, it's going okay. There's no particular retest or anything because that broke above, but it also deviated below, which also isn't a good sign. But I don't really like this setup, right? It's better to kind of focus on this as a range like so. Very easy, very simple. Play the break of that. Play above 121 or maybe short below 100 if it goes down below. Maybe not short per se, but you get the idea. So we have a bearish consolidation turn into a bearish wedge, so we could see some downward acceleration to the downside. If we don't, that is a bullish sign, and so we'll see how that plays out. Usually the wedge consolidation, if it's not effective, that ends up giving the opposing trend, in this case bulls, a chance to recover that. And so overall, it's not looking too bad. It's not really what I want to see, but it's not unhealthy either. Even a drop would be healthy in that sense. So but yeah, that's basically Solana in a nutshell. I think you know I want to give more analysis on Solana. I think it does lend more analysis, but it's just really in a tricky spot. This is somewhat reaccumulative, and I don't know if that's the right way to analyze it. But it would make sense here because you have the two drives up, you have a lower drive. Typically, you want to see it go above this zone, but it did wick above, so it's possible it could count. And so if we get a consolidation, if we stay, so here's another thing. So if we add another marker here, so we'll just get rid of this as well. If this stays above this range and consolidates between the middle marker and this support structure, that's actually a bullish sign as well. This is going to be a kind of a round. So look at this as like an Adam and Eve pattern, and then you have a retest of that Adam and Eve pattern, and then you could launch forward. So that's certainly possible as well. And the marker for that would be roughly around 105, definitely above 100. And so, but keep that in mind. That is a possibility as well. So anyway, that's a little bit of extra analysis to that with the rest of the markets. So overall, markets are looking pretty good. I think the holidays kind of made it a little wonky because, and that's normal. It tends to do that. People do things for tax harvesting or, what have you, various different things, taking off and just not paying attention to the charts. And you should. I don't think it's healthy to stay at the charts every day, all day for years on end. But overall, the market looks pretty good. So just to kind of recap, we did have a bullish cross on Bitcoin with a break of the consolidation, so it looks healthy to me. We're on our way potentially to 47,300, if not 50,000 or slightly higher. I am watching for a parabolic break of about 52,000. I don't think that that's going to happen. I don't think that we are going to go on a parabolic break before the halving. It's a lot of people say it's popular opinion. Some people say it's not. I don't really care. That's just what I see on the charts. And so I'm willing to disagree and be friends with whoever does disagree. And that's fine. Ethereum, we are in a bullish channel. I like it so far. We have this rejection, which isn't... I want to say that rejections, I don't mean to say in a bad light. It's just what I currently see. If we can break above that to 24,030, then I think we're on our way to 2,900. I think that looks pretty good. Bitcoin and Ethereum look pretty healthy, also working in line with the ETF news versus the other ones. Solana, I do have a little bit of questions. I'm cautiously optimistic. I think I would almost lend myself to think that we might get a reaccumulation, and that might be hiding in plain sight as Bitcoin and ETF kind of take over a little bit. Solana will probably decrease, and I think that would create a buying opportunity, especially since we're at the 50 marker here on the 4 hour. I think so don't forget about Solana if the ETF news does present itself. And so overall, it's looking good overall. Now, with the ETF news, it seems like it's very likely to be approved. I think there's already rules showing like ETF fees and what's allocated, like up to 10 to 15% of the index or whatever. And so I think all those are good bullish signs of acceptance. So just keep that in mind. And then last but not least, I mentioned the tax thing. Take that with a grain of salt. Please verify that. I recently, you know, through editing, I've recently discovered that that is not for individuals necessarily. It's for trades or businesses. But keep in mind, I'm not a tax professional. Try to verify that with your own CPA. And so, that being said, that's the video. I hope you enjoyed it. I'm looking forward to a great 2024. Hope you had a good holiday season, and let's keep trying to make some money here. So, all right. That being said, let me know if you have any questions. Like, subscribe if you haven't, and enjoyed listening this long. I'll see you next time.